It feels like it went to, we're going to get a deal at some point, to a prolonged battle. Is that binary for you, for the markets?
What I would say is, I wouldn't really use the word binary. I think, it's more really about how long it takes to work, I would argue, itself out. If you look at the U.S. equity market, today we are sitting basically about 3% from the high. Important to keep in mind that equity market moves, pulls back 3 to 5% every 2 to 3 months. So we're sitting at, I would say, a pretty mild pullback place, number one. So far, the equity market's really saying, nothing's really out of the ordinary, this will work itself out. I would argue, given where, and I think everybody knows this, we've gotten to a point where, things kind of have to get worse. So there has to be some other catalyst that I can't think of for things to really, make progress. Now, what I would argue is basically, things are likely to get worse because equities are about growth. And I would argue near-term growth in the U.S. is going to slow. For us, most important cyclical indicator is ISM manufacturing. If you look at where it was in August of last year, we are talking in round numbers at 61. We are now all the way down to 53. If you look at, a related indicator, which is export orders, they're very, very strongly correlated with the ISM. And actually, over the last few years, they've been leading the ISM. And so, what export orders are basically saying is that the ISM is going to fall to below 50 to about 49 over the next 3 months.
Binky, I want to take a half step back here.
Sure.
You said it's a mild pullback, 3% or so. That could have happened for any number of reasons. Is that because, in fact, the trade issue is really not that germane, isn't that important, or because the market is not properly pricing in the possibility it's not going to get resolved anytime soon?
So what I'm actually saying is that, 3 to 5% pullbacks happen every 2 to 3 months, and that's just very normal. We would argue.
So you can't say that's because of some trauma
related.
Over trade.
Trade proved to be the catalyst. It could have been anything else in our view, and we were really calling for this. I would argue that, given the fact that trade has not been resolved, there's no reason to believe that the ISMs are going to stop falling or growth is going to stop falling, which is what the leading indicators in terms of export orders are telling us. And that argues for another 5 to 6% down in the stock market. And so, it's a question of, is there a Trump put in the market? If I look at previous reactions, first off, I would say, the surprising breakdown of sort of talks at the last minute comes on the weekend after the U.S. stock market reached a new high. So I don't think, it's a coincidence.